and what is still underdeveloped is really the access to what we finance that around what the impact the company is looking at. So we need definitely more investors on board, and I hope that there are quite a number of you in the room. Now, as Maxime just mentioned, one of the challenges that we are seeing is still some regulatory bottlenecks, and we hope when we remember what was said in the opening panel today, so some changes might be coming. The foreign exchange restriction is another challenge that we are seeing when we are talking to investors. The repatriation of profit. What we see for the future, how you can address these challenges, is really an impact investing regulatory abide to incentive for social enterprises. Measurement system where all of us we agree, okay, this is how we're going to measure impacts. So this is what I would share with you by Joe. Thank you.
Thank you, Corinne. And I think building up on the IMM practice and everything, I think that really helps. And I do see the opening panel did say that a lot of changes are coming. Some of them already happened. So overall, the investment ecosystem is definitely going to grow. So I'm going to mix this up a bit. So maybe I go to Stanley because he's on the other side. So it gets, I know it's after lunch, so hope everyone is awake. Stanley, as a director in New Energy Nexus, I know you have extensive experience in building climate innovation systems globally. What lessons do you think Bangladesh can learn from these international experiences that have successfully scaled, clean energy solutions or climate solutions? Thank you.
Hello. Okay, thank you so much for asking. So just as an introduction, New Energy Nexus, we're a global organization focusing on energy and climate entrepreneurship. So we operate programs and funds in 15 countries, investing in local entrepreneurs building clean energy companies. So this focuses on renewable energy, electric mobility, and industrial decarbonization as well. So originally we started out 20 years ago in the US and California, but now we're operational in 15 countries. And after building this out throughout Southeast Asia, throughout China, South Asia, there's some clear learnings, right, about building an ecosystem. So you almost need, there's some key stakeholders and key players that are involved, right? Usually government agencies, these stakeholders together. There's investors and corporates who are the clients of the startups, right? There's the entrepreneurs who you have to create an environment which, people like Sebastian are willing to take that crazy dive and start companies and be successful in the long term, right? So you almost need all of these actors working together for a successful ecosystem to really come into fruition. So, that's sort of the lessons that we've learned in building the ecosystem. So, we're going to be starting a program here, and we're going to be addressing a lot of these kind of gaps in the marketplace where we want to incentivize more founders, more technician training. So,
Thank you, Stanley. Maybe you can pass it off to Wise because sitting beside you don't want to bring the mic all the way here. No, Wise, I know that with your experience in strategy and that you have, you're investing in emerging market and sometimes the systems are very, very complex, right? Impact investing ecosystems and attract more global capital.
Right. So thank you. I'm a venture partner at Sturgeon Capital. We invest primarily in emerging markets like Central Asia, Kazakhstan, Uzbekistan, and South Asia, Bangladesh and Pakistan. So in terms of the ecosystem, because we work with early stage founders, so we usually come in with a ticket size of 500,000 up to $1.5 million. For us, of course, a lot of the challenges that have already been mentioned, the challenges that are these are worth taking those risks. So when we're doing due diligence on a particular company and we're coming in at a $5 million or a $10 million valuation or a $15 million valuation, that this company could in fact $5 million company, we have to be relatively comfortable with the fluidity of the ecosystem in emerging markets. But definitely capital control still $1 valuation, and then the ecosystem that we feel that in the lifetime of our. Other than that, I think just the ease of doing, and I've played, and we had raised about $2.5 million process that everything that you think is going to be complicated is complicated, but everything that you think is the easy part is also complicated, right? So I think that's the challenge of working in Bangladesh, whether you think that raising investment is the hard part, bringing that money into the country is the easy part. But then you realize that no, Bangladesh Bank has a quarterly FDI reporting requirement, which is 20 pages long. And then you're like, no, I'm bringing money in, I'm not taking money out. So a lot of these things, I think over time, us folks who are in the ecosystem, maybe there's like 5 or 10 things that we can really focus on, including making taxation a lot simpler. The systems are sort of designed to rope in bad actors, assuming that nobody pays their fair share of taxes. So we have to collect tax at every stage in every possible way. So for good actors, it actually penalizes them because you end up paying more in taxes than you actually owe, but you'll never get that refund back. So from a cash flow perspective, I think things like this, ease of doing business has lots of scope for improvement. No. And I know most of these things are in general, not specific to ecosystem overall.
Thank you, Wes. I think you ended with something very powerful. And what I hear a lot of businesses say, that bad actors are not going to pay taxes or get away with it anyways. At the end of the day, good actors are the one, even by adhering to regulation, they kind of get penalized. And that is something possibly we'll get to see one work better. Maybe I can put Sebastian on the spot because you are the founder in the room within the group. Group. Sebastian, so this is something climate innovation and impact at scale, right? There are no companies that have really scaled climate innovation or create. And if there are exceptions,
as the founder representative. So Solskjaer works on 2 verticals, which are, I would say, 2 sides of the same coin. One is the solar. We're doing a lot of rooftop solar right now on CNI, and the other one is the storage component, which we do via our e-mobility business line. Now, I think that perception that it lacks sustained impact on the climate side, that overlooks a few of the things which ironically are quite known, but here in Bangladesh, we sometimes tend the solar home system program. It was an investment in that program, which catapulted it from a couple 100 systems to 5 million. Then bad things happened, as they tend to, but that doesn't mean that this was a hugely successful model. Probably from a World Bank and several other DFI perspectives, one of the most successful decentralized energy programs globally. And I think this is something to build on. And whatever happened at its peak, how it went down, was a matter of my PhD thesis. But don't want to go and replicate that. And as an example, what we're looking at right now, this program was implemented by ITCOL, the Infrastructure Development Company Limited. And I think the big difference here is financing not from one or two, but basically from all development actors, from all DFIs. That had as a plus point that they had extreme power to enforce quality and good service in the field, which was key. This at some point. But now we have those, as an example, we have those 5 million electric three-wheelers who run on those lead acid batteries. Now, I did a bit of preparation. So the lead acid batteries cost Bangladesh $30 billion annually in damages, lead poisoning and whatnot. You're good with these numbers. What's the GDP of Bangladesh? 450? Yeah, so we're talking 6-7% of GDP lost because of lead poisoning. So if we can design a programmatic approach akin to the solar home system program, where you can replace 5 million of those batteries with smarter batteries, so the drivers get more money, we don't have all this damage to the economy, and we support the grid. That would be really something. So we're working on that, and I think that's the thing, right? What has worked well? Can we replicate, learn from that, and double down?
Well, thank you, Sebastian, and thank you for sharing a concrete example so that it's easier. And thank you for sharing the founder part of the story as well. Zhang, since you already have the mic, so I'm going to put it up to you and then come back to Jonathan. First of all, I think Cocoon Capital has started investing in Bangladesh, which are very, very excited, especially impact sectors faces a lot of challenge in attracting venture capital firms. So how can Bangladesh make itself more attractive to investors like Cocoon Capital?
Yeah, so I think I'll skip the policy stuff because I think it's covered enough today already, and I think it's obviously a step in the right direction. If you look at Cocoon, so we are an early stage venture capital fund. We're based in Singapore, but we invest around Southeast Asia, right? And we're not explicitly an impact-focused fund, but by virtue of investing in many emerging economies, most, if not all, of our startups actually have a sustainability where I think a lot of impacts. Yeah, where I think a lot of impact startups can actually sort of like rejig your pitch is to actually think about having impact as your sweetener, but actually we raise money from investment from an impact-focused fund. Money, you're just taking money to give away, and effectively the impact you create now won't be there tomorrow, in 5 years, in 6 years, and then what is the point, right? You want continual progression, continual growth, and the only way you can do so is if you have a business that makes money. You are an impact founder, and you want to, I would say, impress upon international investors of your potential in Bangladesh and beyond, is if you can also illustrate the fact that you are creating impact and at the same time creating a business that's going to make money, because most investors are not impact funds, but impact funds are also investors, right? So think about, I'll try to flip it on its head, and then from that angle, right, then essentially you get a much more synergistic business model, in fact.
Well, thank you, Zhang. And I often say that the impact and the financial sustainability are two sides of the same coin. If you don't have financial sustainability, the impact is also not going to be sustainable, right? Jonathan, so it's finally back full circle to you, which is good. Mixes up things a bit. I know that IXS has very successful case studies on mobilizing large-scale capital for underserved markets. So if you could share some of those case studies with us, and what can Bangladesh learn from it?
Sure, thanks. Just for the information of the audience, IX is an impact fund based out of Singapore. In short, Impact Investment Exchange. So we have pioneered one of the instruments, which is called the Women's Livelihood Bond, which was back in 2017. So maybe if I take 2 steps back, one of the interests of launching the Women's Livelihood Bond was of a need of the market. So if you look at the market as a whole, so if you look at Bangladesh, I think the NPL ratio as of 2024 was about 14%. So one of the biggest issues when it comes to startups getting capital from a big fund, even when we go as a fund to raise capital out in the market, is what our LPs basically check is how's your default rate, what is the issues you have. So one of the biggest issues when we raise our women's livelihood bond was when coming into global south markets was how are you going to protect against defaults in the market. So if you look at our women's livelihood bond, we basically have a first loss guarantee. So a first loss guarantee basically means that you actually can protect your fund up to 30%. So even if 30% of your portfolio goes under, so if you look at Bangladesh, then the NPL ratio is about 14%. But in our case, our women's livelihood bond can basically suffer a default rate even up to 30%, and still the fund can function. So some of the development of fund allowing us to bring that much needed private sector capital from the US, Australia, etc. So one of the biggest aspects when it comes to limited partners coming into the fund is how are you going to protect my money? How much you say impact is first. Sometimes a lot of the investors still push an impact finance first. So of course, how do we protect that? So that how we've done that basically is bringing these much needed development sector capital partners as a first loss guarantor. So I think Bangladesh also can do that. So if you look at UK has also done that successfully. So UK has a fund which runs out of the dormant accounts which the central bank or the banks maintain. X can pioneer, but of course, which is open to the market. Much needed room for entrepreneurs to a bad thing. So I think we wouldn't invest into global south these markets and give an exposure to them. Success factor because of the first loss guarantee coming in.
I think definitely can learn from it and how the de-risking of the investment and instrument comes in. I'm going to circle back to you, Corinne. We know that Switzerland has been a long-standing and valuable, remember correctly, right? Could you share during this time initiatives like Dinner Bridge that the embassy has supported in supporting the ecosystem?
By talking about this 5 years work with Be Pretty, but stress yes, impact investor-led answer. So yes, it is a money because you are a business and you are. And what we comes to business development and support to how to have a marketing plan, a financial plan. There are plenty of offers in the this impact measurement. And that's something I always stress for those of you that heard me in other circumstances. This is really important to have a joint definition of how we measure impact. And this is something that we have been doing together with the Lightcastle and Root of have also done in the last 5 years is that we have looked together with True Value and Root of what does gender lens investing means and what can it bring to Bangladesh. And we have a few promising, because the more diverse you are in the company, the more successful study shows you are financially. Then very concretely, what we have also been impact investing on the achievement. Very important is to look at the website. If you look at the website of the Be Pretty, that help understanding what it is about. So knowledge dissemination is for us the next step. And what I would right now, there are extremely interesting experience in impact investing and the role of the regulatory framework and the financial framework, which is Indonesia and India. And we think that the time has also come for us to to learn from neighboring countries and to also tell the Bangladeshi stories, beyond our own borders. And in that sense, we think that in the months and years to come, this learning from to walk the talk of what is necessary in terms of changes.
Thank you, Corinne. I'll have to keep the mic. No worries. I'll go back to Stanley because I don't want you to feel like all left out on the corner. Stanley, very quickly, if I ask you to name 2 key success factors that helps climate tech startups scale, what would those 2 factors would be?
Yeah, I mean, when you're talking about helping climate tech startups to scale, it's usually, we say the 2 C's, cash and clients, right? They need capital and clients to be able to grow, with the main focus on the clients, right? Because at the end of the day, these companies need commercial clients to be able to deploy their product domestically if we want them to stay here, right? So just from this morning and like listening to all the other talks, the textile sector is responsible for 80+% of export value, right? So there's a huge, enormous opportunity there in terms of boilers, waste heat recovery, right? Renewable energy to power the sector. How do we package that in ways that give these entrepreneurs, both international and domestic entrepreneurs, the ability to see that as a huge opportunity to come in, and that has to be done with local associations and government. And we're talking about the key sectors, right? So in agri-tech, right? How do we've seen some recent successes here from domestic startups, but how do we package those into a huge opportunity for startup founders to work on solutions too, right? And then what kind of government programs or subsidies? A lot of programs we run around the world are essentially government fund programs, and then we're trying to get startups to work well with commercial and private sector industries, right? So how much percentage of pilot projects can be covered with government funding, with also bringing in international and domestic private sector capital investors, right? So we have a lot of experience designing these kind of programs and these kind of systems, but we definitely need to work with local players, local government, local startups, and investors to make this all happen.
Well, thank you, Stanley. And again, what I really like about this panel is whenever we are seeing examples going into the very depth on how each of this works. I think that's really useful. Wise, I'll come back to you now. And we have heard a lot throughout this panel about public-private partnerships, instruments that can help de-risk capital. So in your experiences, how do you like to see public-private partnership de-risking investments for impact-driven enterprises? Yeah.
I think the most successful example of public-private partnership is just within our ecosystem is just Startup Bangladesh itself, right? It's a government entity that's been funded by the government, but running as a private sector player. If you speak to many of the portfolio companies of Startup Bangladesh, they've obviously not only received funding, but also a lot of help. And that impact goes a long way. I think what in the future could be done is there's probably potential to have different verticals within Startup Bangladesh. If Startup Bangladesh also has an impact, so I think regardless of having an impact-focused fund, I think a lot of the impact frameworks that organizations like Roots of Impact work with, I think play a huge role. Us at Sturgeon Capital, when we're preparing our impact report for the year, and when we're collecting data from our portfolio companies, and also when we're doing due diligence on companies, when we're looking at their impact, it really changes how we think about investments. So from whatever commercial activity Startup Bangladesh is already doing right now, including those impact lenses, I think is the first major milestone. The second level to graduate to would be to have an impact-focused fund. I think Biniyog Bridhi is a very successful example a cooperation between a private player like LCP and the Swiss government. That is also an example of public-private, just a different country's public entity, right? So I think opportunities like that, even with Startup Bangladesh, is probably the biggest platform that Bangladesh has right now.
Thank you, Wes. Sebastian, it's time for me to pick on you again. And we're going to have a question on one of my favorite topics. For Bangladesh climate tech investment space, what kind of innovative financial leverage these trends?
Yeah, I think we have the exception to the rule on the stage. Stanley, which is usually financed somehow linked to the impact, ideally even directly. But the problem is it's the exception, and we need to make this the rule, because the rule still is, how do you finance a startup? It's A, through venture capital, or B, through small business loans. Now, the small business loans don't exist for us in Bangladesh because the banks are basically non-existing for us, which means it only leaves VC. But then you have all the problems we have heard all day on exploitation of funds. And then if you talk about climate and impact, you usually also tend to have an even longer horizon. And we don't have many successful exits here. We have a few, which I think we shouldn't underestimate, but it's the exception. So I think it's probably the VC model is important, but it cannot be the only solution we have in town. So I think we need a lot more, which is somehow linking the financial returns. Doing right now, we do work a lot with the RMG sector, putting solar. So for every megawatt hour we produce there, we sell a renewable energy credit. So we get X amount of dollars per megawatt hour. So if we install more, we get more money. It's as simple as it can get. If I put this to the mobility side of things, I think the important part is, and that's where Bangladesh needs to, I think, develop a little bit further. When you're pretty, for instance, it's always about, you need to measure that impact, and then you need to prove that, and then the outcome is reached. And that, I guess, Maxime, is right now on a company-to-company basis, and you need to somehow get this set up. What if Bangladesh, maybe through Startup Bangladesh even, had a way of measuring that impact ideally through IoT, right? So in our case, the megawatt hours, it's not that someone needs to look where's, okay, how many kilometers did that battery do today? Is it paid back? It's all online, it's all IoT. So can I link the financing to this, even if it's revenue-based? So it's a smart asset financing, which is, I think, the term which is used for this, which has another advantage. If we have another COVID or another revolution or whatever, and for 2 months no vehicle drives, if I have a loan, I have to pay back every month. I have a problem. If it is revenue sharing, then the better it goes, the more I pay back. But if I have such a fiasco or such a disaster, I don't have revenue, I don't have to pay out. So it's kind of also adapting to the volatility of the market, which I think here in Bangladesh is still quite high. So yes, we see, but it cannot be the only choice in town. The banks apparently, as of this morning, are going to come forward now, fingers touch wood and fingers crossed. But I think we need a lot more of these exceptional people here. This needs to become the rule. Thank you.
Well, thank you, Sebastian. Yeah, sure, you wanted to say something? Yeah.
Sorry. Bijan Bhai, I just wanted to add something. When you had asked about de-risking the impact or the venture capital pipeline, I think we speak a lot about how to attract more investment from local and foreign capital sources into Bangladesh. But in the simplest way, the only way to increase investments is by increasing FOMO. So fear of missing out. The current reality of the ecosystem is that there may be 25 great companies, great startups that could each take $1 million, right? But the reality is there's only 5 to 10 venture funds domestically and internationally from Singapore or the US who are actively looking at this space. So what ends up happening is that there's only 5 venture firms and there's 25 great companies. And venture capital sort of works as sort of like a herd mentality, where as soon as one VC fund gives a term sheet, everyone else is like, oh, no, we're going to miss out on that great opportunity. So I think the role for Startup Bangladesh is to, what you mentioned, de-risk the investment pipeline. That as the ecosystem is growing, can we have these 25 great startups or 50 great startups de-risked for the next 2 years, till the investment, instead of 5 investors, there's maybe 15 or 20 investors who are actively looking at the ecosystem. I remember when I had raised my first $2 million check for Telegram back in 2019, the only reason I was able to raise that amount of money very quickly as a 24-year-old is because 6 months prior to my fundraising round, Patao had just raised a very large $15 million round. And the investors who had put in money at a $1 or $2 million valuation saw like a 10x markup on their valuation. And I just benefited from the tailwinds of that. So everyone thought, oh, this must be the next opportunity. And that's the only reason why investors moved really quickly into an emerging market like Bangladesh. So I think de-risking these top 25 or 50 companies, what's the runway that they need to prove the scalability of their companies for the next 5 years? I think that's the best thing that we can do for the ecosystem.
Thank you, Wes. And hopefully the fund of fund declaration that came would definitely also help in the right direction as well. Zhang, I'll come to you before I come to Jonathan. When you are evaluating startups from Singapore say to Bangladesh, what are some of the key metrics you look at?
Yeah, I think everyone will mention obviously traction, all that kind of thing, right? But I think for the way that Cocoon works, it's very important for us to be able to build a relationship with our founders that we invest in, because we only guys are standing in the corner down there. So when I first met them, it was very easy to get along with them. They knew the business. At the same time, I think it was apparent from the first call, right, that there was an impact angle through financial inclusion, through inclusivity, including, I would say, providing access to jobs as well, and things like that. Those were very clear. So they were never really discussed. But what really impressed me about the guys was limited funding, smaller team at the time, and they were able to be profitable. They knew how to get profitable, and they knew how to sort of grow the company just purely on their own devices, right? So these are the things that I would say would impress any investor. So taking that back into any startup, right? This is where I would say 2 things to take away. One is put yourself in the investor's shoes, right? Impact when it comes to emerging economies is something that would be commonly expected or understood. So if you are putting yourself into my shoes, if I'm giving you $500,000, $1 million, what do I need to see? That you have to be able to make money. You have to be able to give me back my money at some point in the future. But then taking that aside, knowing your customer is the second point, right? Because for most companies, the impact you create is paid for by someone else, right? It could be initially from your investors, but most of the time, and hopefully in the future, it would be people's employers that will be paying for this impact that you create. So if you could create impact without anyone else knowing you're creating impact, then I would say that's pretty genuine and that's pretty sustainable, right? So because I would say the example to that would be if you can get an employer to pay $1,000 a month for your software that actually creates financial inclusion for all the employees that are on the software, right? So getting someone else to pay for the impact you're creating with someone else, right? So just purely on that basis, then as an impact startup, you will also be sustainable, right? So coming back to the question, obviously, from a financial investor lens, I have to invest in businesses that paint a sustainable, a scalable, and attractive, but realistic opportunity, right? So if you're sending me a deck, don't put Bangladesh $1 trillion opportunity, and then that is your opportunity slide, right? Because I'm gonna be a bit pissed if I see that, Make it make sense, right? Make it have context to what you do as a business so that you educate me, not just about Bangladesh, but about your opportunity as well.
Thank you, Jong. And a reminder to everyone that GDP size is not your market size. Jonathan, the last question of the panel to you. We have seen that impact-linked finance is increasingly becoming more and more popular. How do you see this space evolving in Bangladesh, especially for the impact enterprise space?
Sure. I'll talk about impact-linked financing generally. So all thing impact-linked financing is like, it's a way for you to measure impact and, of course, reduce your return, right? Like the return which you give to your investor, like interest rate reduction also. But now times are evolving, right? So I'll talk on two aspects. One is from a customer's angle. So example, we've invested in a company in Cambodia, basically or compete with the other market players. So they do biochar fertilizer. So typically biochar fertilizer is priced expensive than the normal fertilizer. So because of the technological process they can do, they can actually compete by selling carbon credits and discounting the product to compete with other market players. Second is also in terms of return to the investors as well, or one of the key aspects which investors look at is diversification of revenue. So one of the aspects is we've invested in another startup in Philippines. Basically, they are actually doing products with wind power and solar, etc., and they are also generating the carbon credits. Because of that, they are able to generate another source of income in addition to the megawatts which the government pays them. So if you see as a startup, you can always look at two aspects. One is generating diversification of revenue through looking at impact and also increasing the return to your investors. Second is also in terms of your buyers. So you can also give the impact benefits to the buyers as well, competing your product in the local market as well. When you expenses, so when you compete with consumers through impact, sometimes you might be able to compete in the market. So it's not only that you actually get a reduction on your loan book or your consumers or to your returns. So that way, in these competing markets, like what's going on these days, you can actually give the benefit either to the investor or the buyers.
Thank you, Jonathan. I think that's a great example where the benefit can be passed on to the end user as well. I think with that, we are actually on time. A big hands to all the panels for speaking to the point in depth and finishing on time. So thank you, everyone. And again, thanks to Startup Bangladesh and BIDA for having us. Thank you. I will pass the mic to you. Thank you, Brian. We have to stand for a picture, I guess. Should we stand here? You want us to stand here? Should we stand for the picture? Yeah, we have to stand for the picture. This one?